Hey everyone, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, we've got a very big update from the SEC today. They provided further guidance on securities laws as it relates to crypto assets. And even though we don't have the Clarity Act passed as yet, the agencies, the SEC and the CFTC, are providing guidance, and this is going to help move things along with adoption and allow more institutions to come into the market to build, invest, and much more. So they put out a release titled SEC Clarifies the Application of Federal Securities Laws to Crypto Assets. And Chairman Paul Atkins of the SEC, he was at the DC Blockchain Summit today and he gave some statements. I'll share that with you, but let me give you some more details here. So the commission issued an interpretation that clarifies the application of federal securities laws to crypto assets. This is a major step to provide greater clarity regarding the commission's treatment of crypto assets. So SEC Chair Paul Atkins tweeted out the following regarding the announcement, saying, "After more than a decade of uncertainty, this interpretation will provide market participants with a clear understanding of how the SEC treats crypto assets under federal securities laws. This is what regulatory agencies are supposed to do, draw clear lines in terms." Now, let me play a clip of him speaking at the DC Blockchain Summit today, which is hosted by the Digital Chamber.
So today, I'm pleased to announce that the SEC's persistent failure to provide clarity on this question is over. As we speak, the Commission is implementing a token taxonomy and investment contract interpretation, and you should find that in your inbox or if you look on the website when you get home. Our interpretation, which is grounded in existing law and informed by extensive public input, establishes 4 asset categories that are not deemed to be securities. So digital commodities, digital collectibles, digital tools, and payment stablecoins under the Genius Act. With these categories in place, the interpretation then clarifies that only one crypto asset class remains subject to securities laws, namely digital securities, which are traditional securities that are tokenized. This distinction returns the SEC to its core mission and statutory authority of protecting investors involved in securities transactions. We're not the Securities and Everything Commission anymore. So, thank you.
So this is really great, folks. This is very bullish. Again, it is providing the clarity for more adoption of crypto, more investment into crypto. And we know this asset class is still very young and there's still more to go. Higher valuations of the respective blockchains that get adopted, plus the higher valuations of their native tokens. And again, it is both the SEC and the CFTC collaborating on these things. Recently, I reported about Mike Seelig, chair of the CFTC, and Paul Atkins sitting down together, shaking hands. They're talking about collaborating. So this is really, really awesome. Now, here's what folks in the industry are saying. First up, Stuart Alderati, Ripple's chief legal officer. He said, "We always knew XRP wasn't a security, and now the SEC has made clear what it is, a digital commodity. Grateful to the Crypto Task Force for working to deliver the clarity that markets, investors, and innovators have long deserved." Nate Geraci, who's been a frequent guest on the podcast, said SEC just issued critical guidance on how various crypto assets will be classified, not waiting on the Clarity Act. Most crypto assets are not themselves securities. This is a quote from the guidance the SEC provided. Nate adds, this type of pro-crypto innovation stance from the SEC would have been unthinkable 2 years ago. So of course, Gary Gensler was not going to provide anything like this. In fact, he was trying to stifle the industry so his buddies can catch up and they can control it, right? Talking about his Wall Street TradFi buddies. So guys, this is so awesome. This is so great. And I think this is going to lead to more adoption because, again, if you think about it, you certainly need the Clarity Act. But the actual people who need to provide the guidance and enforce it are the agencies. So the fact that the agencies are going ahead and getting this done while the Clarity Act is still being sorted out in the Senate is really great. So they're getting ahead of the curve here, and I really, really love what's happening. And I'm going to try to get SEC Chair Paul Atkins on the podcast to talk about this because this is all great. Now, speaking of agencies, the popular Solana wallet Phantom wins the CFTC nod to access regulated derivatives markets. So these agencies are providing guidance. They are giving out approvals on what the infrastructure companies like wallets and exchanges can do, and much more. So let me give you some details here. The CFTC said it won't pursue an enforcement against the Phantom wallet for acting as a non-custodial interface connecting users to registered derivatives platforms, removing the need for broker registration under specific conditions. Phantom calls the relief first of its kind, enabling in-app access to regulated derivatives and event contracts while signaling a potential regulatory template for other crypto wallet providers. So I think this is spot on. I think this could be further guidance that the CFTC provides, and really great to see these things, guys. This is awesome. I'm really, really excited about it because, I was feeling a bit upset about the Clarity Act situation, but the fact that these agencies are moving ahead is really, really great. And, it calls back to what Austin Campbell, who I interviewed not too long ago, and many of you, I think, really appreciated that interview. He said it really comes down to the agencies, the regulatory agencies. And I think this is a clear example that it matters what they do, not so much that the Clarity Act is passed or not passed. Yes, you need the Clarity Act passed because it just makes everything official and it's rubber stamped and signed into law, right? But the agencies themselves have to act. But guys, it's a new day and things are moving in the right direction. Folks, this episode is brought to you by iTrust Capital, which gives you a great alternative to invest in crypto as well as precious metals like gold and silver. So iTrust Capital provides you with an IRA so that you can invest in these assets and get huge tax advantages. Within the IRA, you can buy and sell 80 plus crypto assets, gold and silver, and you can do this 24/7. It's low cost, there's no monthly fee. And with regards to the gold and silver, it is not paper gold and silver. If you want to redeem it, you can actually redeem the physical assets, so the physical gold and silver. So that's one of the unique aspects of this program. And it's not like the many other exchanges and platforms out there that say they have it, but they really don't, right? It's all paper gold and paper silver, but that's not the case here. And if you have an existing 401k or IRA, you can simply roll it over to the iTrust IRA setup. And folks, they have a great custody option, which is called premium custody. And it's an institutional grade level service where they use Coinbase Prime, which BlackRock uses. They also leverage Fidelity, Fireblocks, and many others. And it's a closed loop system. So even if someone hacks into your account, they can't withdraw any funds. And it is also accessible 24/7. It's low fees as well. So great options here, guys. If you have a long-term outlook on these assets, you can do it via the IRA and of course have the peace of mind with the custody service. So if you sign up with my link, by the way, guys, you can get a $100 funding bonus. The link will be in the description. So check out iTrust Capital, one of the best platforms out there. Okay, folks, big news from MasterCard today. They are looking to acquire stablecoin infrastructure company BVNK for up to $1.8 billion. So the deal would add on-chain payment rails for stablecoins, tokenized deposits, and tokenized assets across 130 plus countries to MasterCard's existing network. MasterCard's been doing a lot. If you guys recall, most recently, they launched their crypto partner program, right? That was just last week, where they're bringing crypto and banking companies together. So they're not playing around. Folks, this is a huge acquisition, right? Do you think they're bearish on blockchain technology? Do you think they see blockchain technology as a fad? Of course not. I think everybody recognizes this is how the markets, the economies, and governments will all function. They're going to be running on blockchain rails. So again, MasterCard agreed to buy the UK-based stablecoin infrastructure firm BVNK for as much as $1.8 billion. The deal is intended to link on-chain stablecoin payments with MasterCard's global network for cross-border transfers, remittances, and business-to-business transactions. The acquisition, which follows failed talks between BVNK and Coinbase, underscores MasterCard's broader push into digital assets amid rising stablecoin payment volumes and is expected to close by year-end pending regulatory approvals. Now, many of you may recall I interviewed MasterCard's head of crypto last year. I hope to have him back on soon to talk about all these great initiatives and this upcoming acquisition and, talk about their updated strategy because it's amazing what's happening. And of course, their competitors, Visa, are also doing the same thing, building with blockchain tech, stable coins, and much more. It's just amazing to see these firms do these things. Now, speaking of stable coins, PayPal had just made a major update. So their stablecoin PYUSD is rolling out onto the PayPal wallet across 70 markets, enabling faster settlements, lower costs, and built for everyday global commerce. Again, send this type of news to these crypto skeptics, the blockchain skeptics who don't understand what's happening. Because aside from all the, the speculation and so forth, there's a legit technology that's going to be the fabric of how things are functioning, as I mentioned, in the capital markets, the economies and governments moving forward. So this is incredible. I will be interviewing PayPal's head of crypto this week to talk about this news. And we're going to go through all the details and, what's their plan with Venmo and their crypto offering, of course, the stablecoin rollout across the globe. And we're going to go through all the details and make sure you guys are subscribed for those interviews. Now, moving ahead, this one's big as well. Moody's, many of you know, is the ratings agency, becomes the first credit rating agency to bring its ratings on chain, debuting its token integration engine on the Canton network. Remember, I've been telling you guys about Canton Network, right? The DTCC is using them. I'm a Canton token holder, and I will continue to accumulate this token in the bear market as it hits new lows and other altcoins as well. But this is one of my big bets. So huge news. Moody's is also going to be running a node on the Canton Network. So, I don't even know what to say anymore. This is just profound, right? You're just seeing the biggest names adopt crypto and blockchain technology in different ways. So Moody's Corporation today announced that Moody's Ratings has launched its network agnostic token integration engine, becoming the first credit rating agency to ingest analytical data and share credit insights on chain. As an inaugural step, it is the first rating agency to operate a node on the Canton network. The milestone marks a significant step in Moody's commitment to digital innovation, intending to enable secure, compliant, and efficient ingestion of data and dissemination of ratings enabled by technology built for integration across platforms. Now, some of you may say, Tony, why would they need to put it on the blockchain? Well, if we're going to 24/7, 365 markets and expanding markets globally, the current system can't handle that. Blockchains is the way to go. So that's why it's all going on chain. The assets, the analytics, the data, right? All these things, everything that greases the whole system on chain, guys. So this is why, regardless of if we're in a bear market and there's volatility, have the macro view of where the puck is heading here, right? Take your bets, be patient, and it will pay off, but you got to be patient because there are cycles to markets. There are macro factors that affect markets, but obviously, eventually, it all works out. We just got to go through the roller coaster ride. Here's another example of institutional adoption. So, U.S. regional banks are building tokenized deposit network with on ZKsync to rival stablecoins. So, one of the things that banks are looking to do is build tokenized deposits, which they kind of rival stablecoins in a way, but not entirely because they can certainly coexist. So this is a very, very fascinating one. It says here the Carry network, and I've heard of this, but I don't know too much. So the Carry, CARI network, is targeting a 2026 rollout as banks test issuance, transfers, and redemption of digital deposits. Participating banks include Huntington Bank Shares, First Horizon, M&T Bank, KeyCorp, and Old National Bank Corp. So certainly regional banks here, pretty small, right? So the Carry network is, they're going to use it to move tokenized deposits instantly on blockchain rails while keeping funds inside the regulated banking system. Built on ZKsync's infrastructure, the project is targeting a 2026 rollout as banks test issuance, transfers, and redemption of digital deposits. So again, you're just seeing incredible stuff here. Now, just so you know, the Carry Network is a layer 2 platform built on ZKsync. And if you don't know about ZKsync, there is a token. So again, you could look to invest in this token, not financial advice, because I'm not saying that, this network that they built is going to be successful. I don't know. I'm speaking of the banks, but clearly there's adoption. So if the price of this token is down and, might be a good bet, it is down significantly, right? You can certainly grab some. And I'm not saying it's going to go to the moon, but you know that there's potential for upside because it's getting utility and with news headlines of banks using it. You guys get what I'm saying, right? How you want to approach investing. There's other things you need to look at, like tokenomics, like who's behind the project and much more. Do your full due diligence there. But I mean, this is real world adoption here, right? This is what you want to see from it's getting adoption from the biggest institutions in the world. Moving ahead, crypto trading firm GSR expands token advisory with $57 million in acquisitions. Wow. You guys may recall I interviewed one of the folks from GSR, I think it was last year. Yeah, late last year. And they're one of the crypto market makers, well known. They also do a lot more than market making. Looks like they're making some big acquisitions here. So crypto trading firm GSR is acquiring Autonomous and Architect for $57 million to help crypto projects launch their tokens. Smart move. You're a market maker, have the ability to help companies and different projects to launch their tokens. So Autonomous will retain its brand and focus on token launch operations, while Architect will form the core of a new unit called GSR Digital Asset Advisory. By combining token design, fundraising, market access, and treasury operations on a single platform, GSR aims to replace the current patchwork of separate service providers. Very smart move, but you can see here, everybody's gearing up, doing as much of a land grab as possible, acquiring companies, building out their network, preparing for where the puck is heading, right, folks? Final news item here. Ripple looks to expand crypto payment services in Brazil. So Ripple said it is expanding its digital asset services in Brazil and plans to apply for a virtual asset service provider license with the country's central bank. The company is rolling out an integrated platform for banks and fintechs that combines cross-border payments, crypto custody, brokerage, and treasury tools. Ripple's Brazil push comes amid rapid expansion through billion-dollar acquisitions and launching a US dollar stablecoin, Ripple USD, RLUSD. So big expansion here, and Ripple continues to build its partnerships with fintechs and banks around the world. And of course, they're pushing the usage of the XRP ledger, their stablecoin RLUSD, and now they have all these brokerage and settlement platforms and all these things that if people want to even get exposure to other assets like Bitcoin, they can do that. They want to have a custodian. Ripple provides that. Smart move here by the team at Ripple, and they're going to be a powerhouse. The headwinds they face with the SEC all gone, and it's been only up from here. So if you go to rwa.xyz, which is a site I've shared with you guys, you see the XRP ledger is now number four, guys, in total value that is tokenized on the XRP ledger. So it's been growing and rising, incredible stuff here. So, go check it out, guys. You can see how the other blockchains are performing. So just imagine the XRP ledger was not getting any type of adoption for a long time. And now you just look at the chart and it's been only up and up. The trend is up here, right? People are putting all types of tokenized assets and much more on the XRP ledger now. So go check it out, guys. The data doesn't lie here. And again, it's not just the XRP ledger. You can look at the Canton network, Ethereum, Solana, and much more. Folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. Subscribe if you haven't as yet. Folks, be sure to support the podcast by subscribing to my free email newsletter. It is 100% free. Link will be in the description. I put out a write-up yesterday. Also, be sure to grab a copy of my book on Amazon. It's available in paperback and digital. And if you want to expand your knowledge about crypto and blockchain, check out my comprehensive course at mycryptocourse.com. Knowledge is power. Get a full understanding of what this technology is and how it's applied and being used in different ways. And right now, folks, I'm offering a discount on the course if you use the code BEAR. Yes, BEAR, BEAR, because it's a bear market. So you get 50% off the course price. So again, use the code BEAR to purchase the course and get a 50% discount. And again, packed with tons of value, and you can go at your own pace. It's lifetime access. Share it with your friends and family if you want. And I continually update it. And if you have questions within each lesson, you can leave a comment and ask a question, and I usually reply. So if you sign up and you go in there, you'll see a lot of people have asked questions, and I reply and I say things as well. So be sure to check it out, guys. Go to mycryptocourse.com. Folks, all the links will be in the description. Thank you so much for tuning in. I appreciate you all, and I'll talk to you all later.